This is Shelley Craft coming to you live on SNNLive. We're at the Cambridge House, California Investment Conference here in Palm Springs 2014. With me is a familiar face. It's Rick Rule from Sprott U.S. Holdings, Inc., a speaker at this conference. Rick, welcome back to SNNLive.
Shelley, it's always a pleasure. Thank you.
It's good to have you. So let's get right into it. When I see you after a couple of months, 3 months, 6 months, you always have a new take on what's going on. And sometimes it's the same thing that was going on. What's going on today?
Well, I think what we talked about in our last interview, the fact that this market is bifurcated, is a very important thing for your viewers to look at. If you look back at 2013, the first third of that year, the exhibitor stock charts at a place like this resembled the topographic map of ski hills, upper left to lower right. The middle part of the year, the stock charts looked, as we discussed on your show, like the electrocardiogram of a corpse. Both the buyers and the sellers were exhausted. We've seen just in the last 3 months, Shelley, bifurcation, where the best issuers among the juniors have begun to tick up. Not on big volumes, but we've exhausted the sellers. This happened very dramatically in the middle of the year 2000, which marked the bottom of that 1998 to 2003 bear market. It's too early to say we have really truly put in a bottom, but the most important statistic, this bifurcation, is one that's really and truly in.
I'm going to ask you a question that came to mind. It was near the end of the year, and there was cash on the sidelines, as everybody had made a big deal about. And then all of a sudden, the fund managers realized that if they're sitting on cash, they better go spend it. And the market had that almost like the most perfect window dressing event I've seen in the course of many, many years. And the money plowed into the market, the Dow went crazy, and everything else besides it, particularly resources, continued to suffer. What's your comment on that?
Well, I think the Dow has been driven partly, in fact, by window dressing, but also it's been driven by extremely accommodative fiscal policy. People look at the dividends on the S&P 500 in the 2% range, and they compare them with the paltry dividends that they get in the bank. I think a lot of this is interest rate driven. I suspect if you take the vodka back out of the punch, that the major markets will look somewhat less attractive than they do today. Sadly, early on in a general equities decline, I mean, we must realize that junior resource stocks are stocks too. It might hurt this sector, but it'll hurt this sector from a very low base relative to the bases that have been put in by the broader markets.
So when you look at 2014 going forward, we're standing here, it's the first quarter. There seems to be a couple of different, bottoms been found before, and things are starting to tick up. Is it bullish, or is it just a bounce in the bear market? How do you describe, and please, I know our audience wants this answer.
I think, and emphasize think, that we have put in a bottom. What will confirm that will be issuer capitulation. What we saw in July of 2000 was the better issuers in the junior market said, forget about dilution, forget about trying to survive. Let's raise the money that we need to raise to build our businesses and grow. What happened to us 3 years ago happened 3 years ago. We need to bite the bullet and we need to grow. If, in addition to bifurcation in this market, we see issuer capitulation. If we see new money coming into the sector, irrespective of the price that it has to come into the sector, and we see that capital deployed growing these businesses, we will grow as dramatically as we grew in 2000, 2001, 2002. That will be the sign that the game is really, truly, completely on.
In 2013, the majors, the gold producers, the silver producers took gigantic write-offs on a quarterly basis. Is that over? And part two of that question is, how did that really affect the junior market?
It isn't over. In fact, if the gold and silver prices don't increase fairly dramatically this year, which they may or may not, there are further write-downs to come. And it negatively impacted the junior market in two ways. First of all, it dampened investor perception with regards to the whole segment. And pretty obviously, with the major mining companies on a global basis writing off $60 or $70 billion of prior acquisitions, their appetite for new acquisitions was somewhat sated. If you look across the mining sector, not just gold and silver, but base metals too, probably 3/4 of the management teams that were present 10 years ago were thanked and excused in the last 3 years. And it chastened the remaining management teams and the replacement management teams from doing the acquisitions that are the lifeblood of the junior market.
You have an investor audience here that's looking for guidance, particularly in the micro-cap, emerging growth, junior markets. How would you give them your best advice as to what they should do in the coming year?
We are at or approaching a market bottom. Money is made in speculative sectors by buying low and selling high. You have the opportunity in the next 12 to 18 months to buy low. The truth is, this is my 5th major market cycle. Every single one reinforced to me that bear markets like the one we've been through and the one that we're in are the authors of bull markets. A market which has fallen by 75% in 4 years is arithmetically 75% less risky. People perceive the risk when they've experienced it, and their ongoing risk is lowest. It's ironic. They say, well, Warren Buffett in particular says his fortune is due to being brave when others were afraid and afraid when others were brave. Think about whether the ones around you right now are afraid or brave, and think about what you would do as a contrarian in the context of that observation.
You know, I was going to wrap up this interview until your last comment, and then it stimulated something to me regarding the fundamentals versus the technicals. So as an analyst, obviously, where would you go for prudent guidance in the coming quarters of 2014? Would you rely more on a technical analysis or a fundamental analysis? Because you've touched on both.
Obviously, for me, it's fundamental analysis. Markets are facilities to buy and sell physical assets. They are not really sources of information. Where the rubber meets the road, where money is made, is finding companies that are selling for less than they're worth, where the probability exists that what they're worth is going to multiply. In other words, you're getting the future growth for free because you're getting the current reality at a discount. You don't do that with charts. You do that with balance sheets, you do it with management teams, you do it with income statements.
So let's just give an overview of Sprott, and then we'll wrap this up.
Sprott is a fairly large $10 billion asset under management, asset under administration, money manager focused on resources, resources, and resources. We operate on a global basis. We've grown our business for 30 years by supporting the very best public and private issuers in trying times like these. For retail investors, we publish something called Sprott's Thoughts 3 times a week. It's free. Come to our website, hit subscribe. You'll get the best ideas from the best minds in Sprott, including Dr. Mark Faber, Eric Sprott, and of course myself. The price is right. It's free.
By the way, thanks for the information. I know people want to know more about Sprott. To finish that off, what's the website?
The website is www.sprottglobal.com, or if you're Canadian, www.sprott.com.
Ladies and gentlemen, Mr. Rick Rule of Sprott U.S. Holdings, Inc., a speaker, a research writer, an analyst, an author of one of the issues that in MicroCap Review magazine. We're at Cambridge House, California Investment Conference in Palm Springs 2014. I'm Shelley Kraft. This is SNN Live. Rick, thanks again for coming on to SNN Live.
Always my pleasure, Shelley. Thank you.
Good to have you.